We'll dump the lobby in. Good morning, everybody.
Morning.
Good morning.
Oh, we got Mark Martinez this part. All right. We always need that one person who's really going to be interactive with us. Mark, you just indirectly volunteered.
All right.
All right, guys, good morning or good afternoon, depending on where you are. We'll give it a couple meetings. We had a lot of people asking about the link within the last 5 minutes. So please bear with us. We'll give it a couple minutes to let people join so we don't have to repeat anything. So as we prepare to get started, any questions? Anybody? Dude, we got Bobby Burks on camera. Right on. I'll tell you what, Bobby gets an eighth off his next deal he sends to us. Right there is the benefit to going on camera. Anybody else want to take us up on an eighth of a point price improvement? If not, we're going to give everybody's eighth of a point. Oh, Paul's like, heck yeah, I'm in on it too.
I'm putting together a deal that I'm going to send to you here shortly.
Okay, excellent. All right, Dylan, keep track of everyone that goes on camera. And when you guys, Mark's taking it also. When you guys send a loan in, I'm dead serious. We're going to hook you up on pricing. We appreciate it. So much nicer than just looking at a blank screen of everyone. Yeah. So Paul is in. All right, we're pretty soon we're going to have the entire organization on camera.
Jason?
Yes.
I have a loan in your pipe right now in underwriting. Do I get it on that one?
Absolutely.
You like the way I did that?
Todd is in a very generous mood today. So
Oh,
hey Todd, you heard him. I need my
I'm still trying to. I think I need some Q-tips. I don't know.
I need to slide you my loan number. It's in underwriting right now.
We already know your loan number. We're good there. We just can't see you with the camouflage.
You see me?
Oh, I just came back to page 1. Like all of page 1 is on camera. All right, guys, we'll give it another minute or so, and then we'll get started. Any questions anybody has before we really dive into it?
You want me to wait and see if you cover it first? Because I do have one off top. Because I'm familiar. I just like to get on these things because I always learn something new that I didn't know before.
Gina, you're going to help us kill some time while everybody else is joining the call.
Okay, so on the Elevate DPA, the forgivable one, I noticed something. I was reading the Matrix today. So the minimum FICO, is it 640 or 620? And I saw something about an average. So is it like really 640, but if you have multiple buyers, and one has a 619 and one has a 690, you'll average the two for qualifying purposes?
So there are several questions packed in there. And I'm gonna tackle that, and then we're gonna really officially start the meeting. So did you guys all hear the critical thing? As I was reading the guidelines, that's kind of nice. So thank you for reading the guidelines. The minimum credit score for the FHA product is 640. Now, the minimum credit score for the conventional is 620. However,
got it.
And it's a huge however.
Okay.
If you've tried to run an AUS at 95 or 97% on a 620 credit scored client, you're probably getting a refer. So while the product itself does go down to a 620 on the conventional, it also requires an AUS approval. So that's where we're going to run into a disconnect on that 620 credit score. Generally speaking, we need to be in this 680 range for a 95% LTV AUS. We probably need to be at about 700 plus to see the 97. There is a big sticking point at that 97% LTV. And it also requires your client to be a first-time home buyer. And then the third component, so hopefully that clarifies it, Gina. And then the third component to that was the average credit score. And that is a Fannie Mae product specifically. And it is designed exclusively when we have one borrower whose credit score is under 620, which was previously the Fannie Mae minimum credit score. But they still have this product available. So what it does, it allows us to average credit scores of up to 4 borrowers if one of your borrowers' credit score is sub 620. So it's not available FHA. It's not available if you have a 640 and an 800. It is specifically geared to bring that one borrower that is sub 620 into the transaction from an income qualification standpoint.
Okay. So wait, didn't Fannie Mae lower their minimum?
So yeah, Fannie Mae then lowered their minimum to actually they eliminated their minimum, but I don't know anybody that's actually able to do that. And AUS will still average the credit scores when you have one borrower below 620. So it's really kind of a unique dynamic on that. But again, then you're going to need to get an AUS approval. So you've got to hope that if you've got somebody with a higher credit score, they're significantly higher to really bring that 620 individual up.
Okay, thank you.
Okay. All right, we are going to officially get started. Good morning, good afternoon, depending on where you are. We have people from all over the country. My name is Jason Twiford with Orion Lending. I am your account executive. On this call with me, I've got 4 screens of people, lots of them on camera. Everybody that wanted price incentives gets to go on camera. Dylan is tracking that meticulously. So for everybody on page 3 and 4 that's not on camera, we're going to throw a huge inducement to you to join us and get on camera. On this call with me is your entire Orion Lending sales team. So I have got Todd Pierce floating around on one of these screens. Todd works with me on my team, very, very seasoned veteran in the industry. He's been in the business for almost 30 years. He is an exceptional resource that keeps our pipeline moving quickly and efficiently. So if you ever need help on anything really, but his expertise is our system, AUS, credit issues, anything that you run into in that whole sphere, Todd is the guy. We've got Dylan Johnson floating around on one of these pages somewhere also, who is newer to the team. He's been with us for about a year. He's here to help with anything you guys need. We really want to give you resources to be able to get connected with us. Have somebody pick up the phone. We'll walk you through your files, questions on conditions. So everybody's on. My background, as your account executive, I have been doing wholesale lending for 33 years, nationally ranked by the Scotsman's Guide, number 10 overall producer on the most recent rank. Well, they haven't pulled up 25 data yet, but number 10 overall producer and the number 1 FHA producer in the country. And a lot of this DPA product that we do is FHA driven. So we have a wealth of knowledge and information as it relates to being able to help you structure your FHA down payment assistance transactions. Quick overview on what we're going to do today. We're going to show you just very quickly some of the benefits of working with my team at Orion Lending, some of the marketing support, as well as the quick pricer. We're going to talk through. We love having you guys here, and we want this to be super interactive, but somebody might need to mute their mic temporarily. We're going to talk through the nuts and bolts of the 3 different DPA products that we offer, how each one works, how we can help you apply it. We're going to give you some real life scenarios on how some of our partners have really used this product to. All right.
Got it, Jason.
You got it? Okay, thank you. Hey, if we have to disable you, just raise your hand or something if you want to get back in the game, because we do love the participation. We're going to talk through the nuts and bolts of this product, how you can use it. And then we're really going to kind of wrap it up with how to promote it to the consumer directly, how to leverage this product to be able to grow your business and your realtor relationships. This is hands down the best product available in the marketplace if you want to promote your business. And I have countless success stories of individuals who have leveraged this product. They've developed new relationships, closed transactions, and earned commissions. So format. It is very informal. This is not one of those scenarios where we are going to sit here and mute everyone. You'll see no one is muted unless you were the one that was talking recently and we had to shut you down, but nobody else is muted. Everyone is encouraged to be on camera. If you guys have questions, feel free to jump them in the chat. Todd and Dylan are going to be covering the chat. If you've got questions you'd like, just jump in, unmute yourself and say, hey, you're talking about the minimum credit score like Gina did. Give me a little bit more detail on that. If we start getting too detailed on a particular transaction or borrower or scenario, we will ask you to take that offline and we will reach out to you as soon as this call ends. Because we do want to be respectful of everyone's time and make sure that this is valuable for everyone, but we are happy to dive into scenarios. If it doesn't fit, if it's not the right and appropriate depth for this call, we will jump on with you momentarily. So before we dive in, we got a quick intro, any questions, and then we're going to get rolling on this. Nope. Okay, so again, Jason Twiford, I'm your account executive. We've got Todd and Dylan on the call also. We are collectively your team with Orion Lending. In addition to that, we have a dedicated operations team. I've got some of the best available in the business. So from setup through account management, underwriting, and funding, I have got a dedicated staff. You will work with the same account manager. You can work with the same underwriter on every one of your files. It allows you to build continuity. If you want to jump on a call with an underwriter, an account manager, we could absolutely accommodate that. If you want to just say, hey, I'd love to meet the underwriter that's going to be underwriting my files, we will set up a Zoom call or a Teams meeting and just give you a 5-minute, like, hey, Nicole, I'm the loan officer. I'm going to send you business. I mean, I'm old school. I've been doing this for 33 years. That's why I want everybody on camera. Literally those concessions, I'm paying for them. We will pay for your participation and you being on camera. That is how much we value that, right? I hate a blank screen. I hate just sending emails. We love getting on the phone and talking to people. So we will give you that opportunity whenever you want to take advantage of it. Some of the additional benefits, and as it really pertains to this down payment assistance product, we've got excellent technology. It allows you to run DU and LP simultaneously. As we get into the guidelines, our conventional down payment assistance product actually partners with both Fannie Mae and Freddie Mac. You get to select which one you want. So for example, if you've got a borrower that's been self-employed for 5 years, you want to qualify for down payment assistance using 1 year of tax returns, we can give you that ability. You have that opportunity. So it is an exceptional program. In addition to the excellent technology, we give you a phenomenal marketing studio. I have got 200 plus flyers available for you to utilize at no cost. Professional marketing, you can go in there completely unbranded for Orion, and we'll touch on that a little bit later, but it gives you the opportunity to go put together down payment assistance flyers, or you could create co-branded material for you and a realtor partner. And for example, if you're going to do an open house this weekend with one of your realtors, jump into our open house flyers. When you type in the address on an open house flyer, it literally pulls data from any MLS in the country. So when you go in and put that address in our pre-created template flyer for an open house, it'll pull the photos. You can select which photo you want to use. In addition to that, it will pull all of the text. You can complete the narrative, either use AI to condense it, you can modify it, but it gives you access to everything right there. So you're not starting from scratch. You could put that together with just your information. You could co-brand it with the realtor partner, which is exceptional. Paul, you have a question, sir.
Yeah, where do we find that? Do we find that on your portal?
Yes, sir. So when you log into the portal, upper right-hand corner, it's going to say Marketing Studio. You click on that, or it's going to say Marketing something. You click on it. It'll give you a pop-up that says Marketing Studio. What I highly recommend, number one, if you don't have credentials for us, Dylan or Todd will type my email or our team email in the chat. Just send us your info. We're happy to get you credentials. We will get everyone locked in with credentials today, and you have full access to the Marketing Studio. Another benefit, you're welcome, sir. Thank you for your question. Specifically, as we talk about some of this down payment assistance product, and that is the use of lender credit to pay your compensation going borrower paid. And what I will tell you, number one, we allow it. We're one of your only lending partners that will allow it, which means if you lock a rate that's paying lender credit, you can use that directly to offset your compensation when going borrower paid. Now, some of our product does allow you to go lender paid. Some is required to go borrower paid, but we give you an added layer of flexibility that nobody else does. And again, we'll talk through that in a little bit more detail. All right, I'm going to jump right into the guidelines, and I'm going to try to do it in a manner that's going to make sense to you, because we have got 3 distinctly different programs for our down payment assistance. And within those programs, we have several different products available. So instead of overloading you with trying to go too deep, I'm going to give you an overview of what the combined set of guidelines will offer. And then if you have questions specific to a particular transaction, we can do a deeper dive and go into that. But what I'm going to give you is just a more macro view of what we have to offer. So typical DPA. And before I start this, quick show of hands. I mean, I've got some people on who loves down payment assistance. Okay, screen number 1, we have Mark, who's shaking his hand a little bit. He might kind of like it. Screen number 2, I got 1 person. I got Roy, who's giving me a thumbs up. Screen number 3, nobody likes down payment assistance. And screen number 4, 1 person might kind of like it. So we've got close to 100 people on the call, and we had 5 to 7 people who really, really like DPA. Okay, I'm going to tell you, that is not atypical. And we do a lot of these trainings, and quite often we have realtors involved with it also. And they hate DPA more than anybody else. And if you're in California, CalHAF is really jaded people. But let's talk about what generally DPA is and what the perception is. DPA is historically and most consistently first-time home buyer, credit score restricted, income restricted, DTI restricted, participating with a city, county, state, municipal agency that's providing some of the funding. So it's a little bit more time consuming. Right? Does that sound like a fair assessment of DPA? Yes. And that's why everyone hates it, because your deals don't close on time. It's cumbersome. There's not great communication. So when we rolled out DPA, we said, these are all of the problems with DPA, and we want to fix that. And we want to offer a product that is easy to use, quick and efficient to close, and it's available to everyone. So unlike your typical DPA, I offer down payment assistance, FHA, USDA, and conventional. These are all nationwide products that do not participate within a city, county, or state municipal agency that participates in either our underwriting, guidelines, or funding of any of these loans. So what does that mean to you? It means these are our products. We wrote the guides, we underwrite it, we fund it, we service it, we make all of the decisions on this product. We are fully delegated. Nobody tells us what we can do. So it is not atypical that we close our DPA transactions in anywhere from 12 to 14 days. Right? The quickest one we've ever closed was 8 days. That's the quickest timeline you can close a TRID-based loan. And again, it's not atypical that we close these in under 2 weeks. So if that gives you a slightly different perspective on down payment assistance, that is excellent. Okay, I'm going to need someone to unmute themselves. What is the buyers? And this is the greatest aspect. And if there was no reason other than this, this is why you're on the call. What is the buyer's perception of down payment assistance if you were to summarize that in 1 or 2 words?
It's going to cost
Jason,
me.
I think
Godsend.
Free money.
Well,
Free money.
Who said
It's gonna
free money?
cost-
Mark, I know Mark, you
Repay.
free money. I'm going to tell you, you can come up with all these other little items like, well, do I have to repay it? Do this, do that, but it's free money. Okay, I use this analogy and people laugh about it, but it's honest to God truth. My wife hates going to the grocery store, and I hate it when she goes because all she does is buy snacks. I'm like, what are we going to have for dinner all week? And we have no food. But I get a list. And if the number one thing on that list is bread, and I walk into the grocery store and there is a guy standing at a table with a pile of bread and his sign that says free bread, and I'm looking for bread on my list, there is a 100% chance. Todd, could you figure out whoever it is that needs to get shut down. See, Todd is also the executioner on this team. Somebody needs to get muted up. He gets him muted up. But going back to this, the consumer's perception with down payment assistance, free money, they're getting something for free. And if you are in the mortgage or real estate business and you've got buyers that are looking for free money and you have the ability to offer free money, I will guarantee you this, your phone will ring. I have challenged people to market this product, and every one of them that has come back and said, it exceeded my expectations. I got calls. So like I said, if I walk into the grocery store with bread on my list and the guy's standing there at the free bread table, I'm going to go talk to him. I may not take his bread. I may not like what the terms of his bread are, but I am at a very minimum going to go have a conversation with the free bread guy. Okay. You can be the equivalent of the free bread guy in our business, the free money guy or the free money girl. And I will assure you of this, and I will give you real life experiences that have happened in the last 30 to 45 days with our valuable partners on deals that we have closed and how they got them put together. And guys, I encourage you, if you have questions, please ask. So we talked about this. There are people from all over the country on this call. These products are available nationwide. If anybody's here is from Washington, you know that Washington gets beat up on down payment assistance. I have got DPA products available in the state of Washington. Most people do not have that. So FHA, USDA, and conventional. Nobody else has a conventional nationwide DPA program. So when you partner with us, you have the ability to go offer product that no one else can offer that is not working with Orion. And we will give you every resource we have and every tool we have available to help you promote this and grow your business. Minimum credit score for this product, Gina, dove into this a little bit early on. Conventional minimum credit score is 620. Okay, that is to an extent, it's not false, but it's misleading. It is 620 with AUS approval. You're going to need a higher credit score to get AUS approval. You probably need to be in that 680 range. FHA minimum credit score as it sits right now is 600, effective with locks May 1st. Credit score is going to 640 across the board. So we're just going to rip that Band-Aid off. If you have anything in process, get it locked before May 1st. Otherwise, as of May 1, minimum credit score is 640. There are just performance issues on that sub 640 DPA product. So we've made the appropriate adjustment. But we can help you with rescores. We can find ways to get you to that 640 threshold. As we talked about what typical DPA is, we are not. So minimum credit score 640. That's lower than what you're going to find with any city, county, state governmental agency. Your client does not need to be a first-time home buyer. My DPA programs have no income limits, and we follow AUS. From a DTI standpoint, we follow AUS. From a guideline credit depth standpoint, because we follow AUS, doing our DPA is like doing a normal FHA or conventional loan. What that means is bring in a non-occupant cosigner. You can use non-occupant cosigners for our DPA products. James, you were looking excited there. Any questions, sir? Anything that got you going?
Them income limits have been killing my customer. They're solid customer, client, excuse me, and them income limits. I'm in California, the income limits is killing them. And for you to say that, man, I'm fully on board. I just need to know what to do.
Right on.
Yeah,
what part of California, James? Where are you in California?
San Diego.
Okay,
County.
right on. I'm in Rancho Cucamonga, so
let's go.
We're close.
Yes, sir.
I love it. I love seeing this is why I like people on camera. I love seeing the excitement when people they recognize the opportunity here. No income limits. Don't need to be a first-time home buyer. Kimberly's getting excited. I love it. Okay, this product is available. SFR, PUD, condo. I will do
give me 1
FHA.
sec. Can you hear me? Hello?
Yep.
I hate to cut you off. I don't want to get too granular here, but I was on a call before, I think 2 weeks ago with you.
Yes.
Andrew here. I know I'm not on camera. I'm sorry, but I'm running on the road. But quickly, I know you would cover the 3 DPAs, right? I don't want to jump the gun too much for other people, but and I know you said you're saying, of course, no income limits. Is that the case now for all 3 of them, the Elevate, Boost, and Aurora? Because doesn't one of them? I
So
know you also said, and you also said, hey, I think it's 160 AMI. I know you also said, hey, we find ways to get around them, depending on their occupation or whatever. But a realtor had asked me. A realtor was like, they had a very specific scenario where they're like, they have a duplex, multifamily unit. They wanted to know, does the potential vacant rental unit, will that add to their qualifying income where you look at the AMI of, let's say, 160? Let's just say, God forbid, we can't get an exception based on their occupation and they're over the 160. Does a vacant the family count towards that AMI income?
So, Andrew, great question. And thank you for jumping in. My first question in connection with this is the buyer a first-time home buyer?
This one, yes.
Okay, so Andrew's been through one of the trainings and it is so informative and enlightening. He decided to come back. So thank you for joining us for round 2. He brings up an asterisk on our product. And that is one of the programs does have the potential for an income limit. So our grant program, and we'll dive into this in a little bit more detail. If your client is a first-time home buyer, there is no income limit. And what I will tell you to set the stage, over 95% of the DPA product we do is for first-time home buyers. And the numbers, some months are 100%. So, and I will clarify this. We do 25 to 35 DPAs a month on an average month. So not me personally, not the organization. So we do a lot of DPA, and we are very familiar with it. So I will tell you, it is rare that we run into an instance where we're dealing with a non-first-time home buyer. But in the event we do, and they go on the grant program specifically, none of the other products have any income restrictions, period. But on the grant, if they are not a first-time home buyer, then there is an AMI restriction of 160% of the county AMI. So, for example, where I'm at, the AMI is about $106,000. 160% of that takes us up to an income of about $170,000. That is occupant borrowers only. So if there are other family members in the house, their income is irrelevant. If you've got a non-occupant cosigner, we don't include their income. This is occupant borrowers only. And then if you fit that unique box of borrowers, we give you exclusions to that, where if your client is a first responder of any form, an educator, so that is anyone from the principal to the janitor to someone that works in the cafeteria, they would be exempt. Medical professionals, so anyone in the medical profession would be exempt. Any civil servant is exempt. Any veteran is exempt. So we will find a way to help you massage that deal. And if they don't fit that box, I've got 10 other programs that I can put them on. So we have, in the entire time we have been doing DPA, had one borrower that was not a first-time home buyer that exceeded the county AMI. One. And we have funded probably in excess of 1,000 of these. So from a percentage basis, the likelihood you end up with one of these is remote at best. And for that borrower, she worked at a like a daycare facility. And we were able to expand our parameters and consider her an educator taking care of 3-year-olds, and we waived her AMI restriction. So when I say we will find a way to make these deals work with you, we will find a way to make these deals work with you. All right, jumping back into it. SFR, PUD, condos, as far as property type. Peaches.
Hey, Jason, I'm sorry if I'm picking you off again.
All right, one at a time, real quick. Andrew, let's put closure on your situation. Did I effectively answer your question, sir?
Not specifically. You did a good job though with the other aspects, but I was specifically asking you.
Oh, yeah, you know what? You asked about rental income. Shit, you know what? I got so focused over here, I saw like shiny object. I might have ADHD. My wife diagnosed me. Rental income, that's at your discretion. So here's, I can't do both. So either we get to pick if you want to use that rental income to qualify or not. If you need it to qualify, then it's included in the AMI. We can say that there is a second unit, there is going to be rent collected on it. We're not using it to qualify, therefore it will not be included in your AMI calculation. So we give you some level of flexibility with respect to how we're going to handle that.
Okay. So if I needed to qualify,
if you need it to qualify, then it is part of the AMI.
Got you. All right. That's what I
okay. Thank you for bringing me back to what your original question actually was.
All right, no problem.
Okay.
Thanks to me, I got this one closing on Friday, still the cook file, so I'm looking to get it done and tell everybody about it, man. So get me there, please.
We will get you there. Thank you for your partnership. Peaches, right, you had a quick question.
Yes. Okay. So here's my question. Here's my scenario. My gentleman owns a medical transport company and has a full-time job. So with both of those, the AMI is well over 160, and he's not a first-time home buyer. Will he still be able to qualify for down payment assistance?
Sounds like he owns a medical he's in a medical professional, or it depends on which product you're looking for. If you're looking for my Boost or my Elevate, we don't have any income limits, period, whether they're first-time home buyers or not. So there is absolutely a path forward for this client.
Okay, so I'll call you. I'll send you the scenario after, or I'll price it afterwards.
Okay, sounds great, Peaches. And I want to make sure you got your credentials, correct?
I believe so, yes.
Okay, we got you taken care of. Rhonda, you had a question.
Yes, let me unmute myself. Okay, my question was on the down payment assistance. I see it's 3.5. I'm looking at your matrix. I pulled it up online. It's 3.5% or 5% on the repayable. Can that be used for closing costs or down payment, or is there a specific? And when it's done that way, is the down payment assistance put into a second mortgage? How does that work?
So we're going to dive into all of that, and we'll answer that question for you. So, okay. And again, I've encouraged people to ask questions. I'm going to defer those to, if we're going to answer it, we'll just kind of continue on script and we'll get to it. And then we can really dive into the nuts and bolts of how you can apply this product more specifically. So condos, I got to get through this bullet point on property type, SFR, PUD, condo. We will do FHA spot approvals, and we have an exceptional condo team that will go through this documentation same day. People always ask, how much additional time will it take? It won't take us any additional time. We will review that documentation very quickly and efficiently. Now, what we do need is a detailed documentation list from the HOA, and sometimes it's difficult to get what we need from the HOA. They're just challenging to work with in general. You can do 2 to 4 units on our DPA. So FHA will go up to 2 units. We avoid all of the self-sufficiency requirements of 3 and 4 units on FHA, but we do offer DPA on 3 to 4 units going conventional. We also do manufactured homes on all of our DPA programs, following standard agency guidelines. And I will tell you that is a fantastic product. We do a lot of business on manufactured homes due to their price point. So if you don't love DPA, you probably really don't want to do DPA on manufactured homes, but I will tell you, it really is a fantastic product to offer your clients. Like I said, we follow AUS, but we will also do manual underwrites on our FHA down payment assistance product, just following standard HUD guidelines, no overlays, no additional requirements. So you have the option for AUS. We'll do manual underwrites. I have conforming as well as high balance down payment assistance products. So don't discount yourself if you're not in a high balance area. That's okay. If you are in a high balance area, you can even offer the DPA to those customers. And this is huge. To me, this is one of the greatest selling points. And I put this on my social media marketing for this product all the time. We offer DPA 100% financing for non-permanent resident aliens. HUD has eliminated non-permanent residents effective with case numbers May of 2025. So they've been out of the picture for almost a year. We still have the ability to close that product, the DPA program, for non-permanent resident aliens. And if you're in an area that has a heavy population of non-permanent resident aliens, this program is an absolute game changer. We touched on the fact we are fully delegated on this. Quick turn times. You can use lender credit to cover your compensation, following standard agency guides as far as seller credit. So 3% on conventional, 6% on FHA. I've got lender paid options on some of the product. We also incorporate 2-1 and 1-0 buy downs to give you some payment relief for your clients. I'm going to touch on the products now, and this is what's going to get us excited. But Julio, you have a question, sir.
Yes, sir. Thanks for taking the time to do this. So you mentioned that non-resident aliens are eligible for these programs. I'm assuming that is not under the FHA and USDA guidelines, correct? Only for conventional?
That is correct. Conventional only.
Okay, and what are the minimum legal statuses, I guess you can say, work permit, work visas, or is there anything more specific you can give us on that?
So we've got an entire matrix, and we'd be happy to send it over to you. So what we're looking for specifically and generally speaking, they've got to have a social security number. So social security card, it's generally going to have that verbiage that says for work purposes only, which is kind of a red flag that they're not a permanent resident. That's okay. We would then want to get a copy of their EAD, their employment authorization card. And we understand there's some unique circumstances around those right now. I mean, we just signed off in a condition where I have 2 borrowers, both cards are expired. They were able to document that they've got their applications submitted. They're in process. They've got a previous card, so there's a history of renewal. We're fine with that. We signed the condition off. So we've got a pretty good working knowledge and understanding of non-permanent residency, what goes into it. We will take visas if they're here on a valid work visa. If they've got an employment authorization, as long as it is not from a sanctioned country, we should be good to proceed with that. But if you've got more specific questions on that, we would love to jump into that with you after the call.
Perfect. Thank you.
Okay, now let's talk product. So I have got repayable programs. And Todd, if you could share your screen, pull up some FHA down payment assistance pricing. I've got repayable product where there is an actual recorded second lien. They do make a monthly payment on that. You may ask yourself, why would anyone take that if there's a grant program available? And we'll walk you through exactly why somebody would take that program. I have got forgivable product where they do have a recorded second lien. It is a silent second. There's no payment on it. There is no interest rate. There is no accruing interest, but they are handcuffed to that first mortgage for a period of time, anywhere from 36 to 60 months of on-time payments on the first at an elevated interest rate, and then the second is forgiven. And when we talk about our forgivable product and our grant program, how many of you just in the state of California? Everyone, we're sharing screens, but I'll assume there are a large percentage of people from California. We're from California. We deal with the CalHAFA program. They offer some product that has a forgivable second. What they neglect to tell you on their forgivable second is that when that second is forgiven after a period of time, your client is going to get a 1099-C, which is a forgiveness of debt. And they consider that forgiveness taxable income. So if there's a $50,000 second that gets forgiven, your client is very unexpectedly, because no one explains this to you or the customer, they're going to get a 1099 for that $50,000, which is taxed at the same rate their income is. I bring that up only because our forgivable product and our grant program do not consider this a forgiveness of debt. Your client will not get a 1099 on that. They're never going to have to pay tax on that. So I've got forgivable product, which I'm going to be honest, not a huge fan. I would much rather see your client on a different program. But I've also got a grant program, and the grant is exceptional. The grant is literally forgiven at the close of money. It is forgiven at the close of escrow. It's free money to your borrower. And for that reason, if we could put everybody on the grant program, I would love to. So we're going to look at the price difference between those 3 programs. All right, Todd. What are we looking at on credit score here? Hopefully 680.
I did it at 700 plus by mistake. So we are at the ultimate, the high end, and I did have that showing here. The 700 plus, I did just change this to show a DTI at maximum over 46 and brought that into play. Initially, I had it without.
Okay. So here's what we're looking at. 700 credit score. And a lot of these clients, life has gotten really expensive. And there's a perception in the industry that DPA buyers are not creditworthy. They're not good buyers. They don't close. And I would absolutely tell you that that is not correct. The majority of these buyers are good credit scores, good stable employment. DTI is generally a little bit higher, but in California, you take a family that's making $120,000 a year, they're really honestly probably struggling to make it paycheck to paycheck. And if we took that family and said, well, when you've saved $40,000 or $50,000, you come back and talk to us and we can help you buy a house, they have no hope of purchasing a home. And there was a study done recently that said for that young generation, their best opportunity to purchase a home is either inheritance if a family member dies or a gift from a family member, right? Not work hard, save money. It is you need an external factor that's going to give you the opportunity to buy. And it's unfortunate. So when I tell you this DPA product really works, it absolutely does. We close a massive volume of business on this product, and it is an exceptional program to leverage to grow your business and market. Let's look at this pricing. So 700 credit score, and the price difference between a 680 and a 700, honestly, is, I believe, 1/8 to 1/4% in fee. It's not significant. When we do DPA, we treat it like a normal FHA or conventional loan. We give you an entire rate stack. It's not, hey, our DPA product pays at 7 1/4. It is your client is in a unique situation. Every situation is unique depending on how much money they have, if we have any seller credit, gift funds, and what we need as far as assistance toward closing costs. So I know Rhonda asked, hey, is there, does the dollar have to go here? We don't care where the money goes. We're going to give you money for the down payment. We're going to give you the opportunity to select a program and lock an interest rate that pays a significant amount of lender credit. So let's just take a scenario. We ran this $450 sales price, which is probably a decent indicator for most areas that we're talking about. All right, Todd, let's get that whole boost, that top repayable. This is our repayable product. This is where there is a recorded lien. The note rate on the second is 2% above the rate on the first, and this second loan is amortized over 15 years. So most DPA products that have a repayable option amortized over 10. So we give you a little bit of price relief here. But this is covering the entire down payment. And then you get to select a rate that's going to provide additional money toward closing costs. So this program is exceptional for the borrowers that have limited funds and limited availability to get seller credit. So, for example, 6 1/4, which is not that far off of where standard market is paying 0.692. It's giving your client credit. If you get into the higher rates, 6.75 is paying 2.6% in lender credit. What that would mean is we're going to cover your entire down payment. We're going to give you, in this $450,000 purchase price scenario, an additional $11,600 to help with loan officer compensation. You could go lender paid on this program, or you could apply any additional funds toward title, escrow, and prepaids. If your client needs more money, when you get up to that 6.99 interest rate, I mean, look at that, guys. We're paying almost $15,000 in lender credit. If you need more money than that, take them up to 7.25. Anything above that is deteriorating lender credit. 7.25 is paying 4.4%. That gives your client almost 8% in total assistance between down payment and closing costs. If you gave them a rate at 7 1/4, everybody on this call could go lender paid, and you would have a minimum 2% in additional money to help with title, escrow, and prepaids. So when you say, why would I ever take a repayable product when there's a grant available? This is why. If you've got a client, I mean, we've closed transactions, we've closed $500,000 deals where a borrower came into the transaction with $5,000 or less, and we have actually refunded EMDs back to the client. True story. And it's so pertinent because we just funded a loan on it today. We had a client that came to us. We had a really good partner. One of your guys, if anybody hears from Equity Smart, it's one of your loan officers, did an exceptional job. He put on his social media that he had down payment assistance product available to help borrowers close escrow with virtually no money out of pocket. And there was a buyer floating around out there that had $3,000 in the bank. And this is an honest to God true story. $3,000 in the bank, got a 60-day notice from his landlord that he needed to move out. Reached out to a couple realtors and loan officers and said he was interested in buying, and 5 people told him they couldn't help him. And this guy just happened to come across an Instagram video that my client put together talking about our specific DPA grant and how he could help people close escrow with no money. So this buyer, okay, this is where we probably should filter it, had to borrow $2,000 from a cousin to come up with the $5,000 EMD. Came up with the EMD, put him under contract, got seller credit, and we closed escrow on that transaction from upload to funding in 13 days. And this loan officer put him on the grant program, had sufficient lender credit to cover all of his costs, and our guy had to pay back his cousin the $2,000. So we went into it and structured it knowing we needed to refund that EMD. We got the EMD refunded and paid that customer back, or paid that cousin back. Now there's part 2 to this story. We took a family, husband and wife, 3 kids, wife stayed, all 3 kids under the age of 5. She stayed home to take care of the kids. They bought a single family residence with an ADU, got automatic instant cash flow from the ADU, and we put them on our grant program. So Todd, if you would, we have a 5% second. I don't want to get super sidetracked with pricing on all of these programs, but scroll down to the grant. Comparing apples to apples, this is our 3.5% grant program. Okay, this is the product I would love to put everyone on because it's free money. And the good news is it's not my money that I'm giving away. It's the company's money. So we give it away. But the pricing is different, right? Comparing apples to apples, 7.25% on my repayable product was paying almost 4.5% in credit. 7.25% on the grant program is paying less than 1%. But the beauty of this grant program, there is no recorded second lien. There is no payment, there is no interest rate, and your client is not stuck with this higher interest rate first mortgage for any long period of time. Because there's no recorded second lien, this grant program that we offer that no one else has, to the best of my knowledge, is the only DPA product available that you can streamline after your client makes 6 payments, waits 210 days. So we literally just funded the streamline for that client today that got them off of that higher interest rate loan, and they are now sitting, as of about 2 hours ago, at a 5.99% interest rate on their new FHA streamline. So it is really exciting when we see how we can put someone into a home, but also give them an exit strategy on how to get out of it. And what really helps is we underwrite it, we fund it, we service it. I'm servicing that loan. So because I'm servicing it and they brought the loan back to us, number one, we waive your underwriting fee. We value the partnership and we value loyalty. So any loan that we close and you bring that same customer back to us on the same property, we waive your underwriting fee. So we waived the fee on that transaction. And because I'm servicing that loan, it allows me to do what we call netting the impound account. What that means is whatever money is currently sitting in the tax and the insurance impound account, I subtract from the payoff. So if you're familiar with streamlines, there's a formula, there's a calculation, you can't include costs and fees. The borrower's always going to be short to close. So the fact that I can subtract what's currently in their impound account is incredibly powerful. And it is an absolute game changer when it comes to closing streamlines. And we give you that ability on all of our DPA product. We will be servicing it. So it allows us to minimize cash to close on any program that we put together. A lot of information to unpack there. Let me just open it up for any quick questions that you might have.
Jason, I have a question really quickly. For the grant program, conventional 1 to 4, I'm also in California. Can a client contribute towards that down payment as well as use the grant?
Yes. And they can
Perfect.
actually do that, Kimberly, on all of our DPAs. So
Perfect.
Rhonda had a question. How does the money get allocated? Really, it's simple. We cover the entire down payment in most cases, and I'll touch something specifically for you, Kimberly. But then let's say you lock that repayable product where there's lender credit. We don't care how you use that lender credit. That could be used to cover your compensation. That could be used for title, escrow, prepaids. In some cases, with the new NAR settlement, it's used to cover realtor commissions. If you end up in a scenario where they've got to pay real estate commissions, and we weren't planning on that. So we don't say, this dollar has to go here. We say we're giving you this nest egg of money to help your client close escrow and get in their home. And how you allocate those funds, we don't care.
So should I also be, I'm sorry, really quickly, when I'm selecting, should I select lender paid to get the best rebate back, or because
Well, to get the maximum lender credit, you would select borrower paid.
Okay, that's
And
what I'm doing.
for example, the Aurora program is not available lender paid. And because there's a minimal amount of credit available on the grant program, it's going to skew the numbers and everything's going to show as a large cost. So I think to really be able to compare apples to apples, I personally prefer to run it borrower paid. Because we give you the ability to use my lender credit to pay your compensation, it's not as critical, in my opinion, to run it lender paid. And if you guys want to jump into a deeper dive on that, I'm happy to take a one-off and really do it, because we do a lot of this DPA. We are surgically precise with how we structure these numbers, and we can walk you through how to maximize your compensation utilizing lender credit and really put this together to get the customer in the home. Todd, if you could pull up a conventional DPA so we can give the team an overview. Now, Kimberly talked about units. So with respect to units, when you look at the units, the 3 and 4 unit conventional only, and as we talk conventional, we don't require your client to be a first-time home buyer. If they are not a first-time home buyer, both Fannie and Freddie limit the LTV to 95%. On the conventional grant, and my conventional is grant only, I offer the grant at 1%, 2%, or 3%. The cool thing about it, people always ask, well, how do I get the 3% grant? You pick it, right? Pricing is different at each level, but you get to select what is going to be the best fit and the best need for your customer. So in most cases, it's 3%. We do a fair amount of 2% conventional grants. It's awesome. You pick it. But if your client is not a first-time home buyer, you're going to be capped at 95. If you are buying a 3 or 4, or actually a 2 to 4 unit property, you are capped at 95. I can bring in the 3% grant, but your customer is going to have to bring in that 2% differential. That could be gift funds. Any way that they can source it is acceptable. Let's say they want to come in with 10% and still bring in the grant. They can do it. I mean, the grant's free money. You could refi them out of it after 6 payments. So they can certainly leverage that. But our typical DPA conventional client is a first-time home buyer. If they're a first-time home buyer, they're eligible for 97% financing. They can combine that with the 3% grant, covers the entire down payment. And here's what the pricing looks like. Not as good as some of the FHA product, but it's not terrible. 7 1/4 is roughly par. It's at a very small cost. 7 3/8, again, small cost. 7 1/2 to 7.5. We do offer some nominal lender credit, but again, not big lender credit. So that's why the grant program is not for everybody. This grant program is perfectly suited for somebody that has 1 to 2% of their own funds, not enough for the down payment. We can pair that with the grant, some seller credit, and get your client closed. One unique aspect, we follow standard agency guidelines. So this does not, like a lot of DPAs, require your client to be at 80% of the AMI. For first-time home buyers, there is no income restriction, no AMI restriction at all. However, if they are at 100% of the AMI, or if you are in a high balance area, so I know Kimberly and James were both California. If you're in a high balance county, it goes to 120%. So Todd, could you scroll down to where it says first-time home buyer, So everybody see that little check mark that Todd is hovering. If your client is a first-time home buyer, you're going to see another box that opens up that says income meets or income exceeds. This pricing was run at income exceeds. If your client is at 100% of the AMI, or like I said, 120% in a high balance county, we waive all of your LLPAs. So, Todd, would you rerun that based on income meets? You're going to see almost a 1% improvement in pricing for those borrowers. So, little known trick. We always want to help you maximize the opportunity for your customer. Now the question becomes, how do we promote this? How do we sell it as this pricing runs? We're getting close to our 1 hour threshold. If anybody needs to jump off, I do understand, but we're also going to open it up for Q&A when we're all done. This is a product I have had clients, loan officers, one in particular. I see her show up at trainings. I see her doing everything that she should be doing, but not getting the result. And I said, hey, what's going on? Oh, I'm just not getting the traction. I said, why don't we shoot a video on this DPA product right now? It will get your phone to ring. This was on a Thursday, and I vividly remember it. She didn't want to do it, but she did it anyway. She might be on the call. Jocelyn, if you're here, thank you for being an awesome test case. We put together a quick video.
Yes, I'm here.
There we go. I'll let you chime in, but she shot a video. We touched on really like 4 bullet points, right? Credit scores down to 600. You don't need to be a first-time home buyer. There are no income limits, and we can do non-permanent resident aliens. I think, Jocelyn, I think that was really the extent of the video. I will tell you, connect with Jocelyn. If she doesn't have a future in mortgage, which she absolutely does, she will be an exceptional video editor. She filmed this video, put it together, posted it. I literally almost had to twist her arm to get her to do it. And Jocelyn, would you share what your feedback was in the first, let's say, 72 hours on this video that you posted?
Yeah, definitely people were interested, not only like clients or people that have just been watching, but as well as realtors. I got a couple DMs like, hey, tell me more about this. And I think I told you, Jason, maybe 1 or 2 pre-approvals came out of that, different products, but hey, it still got the phone to ring. So yeah, that was pretty awesome.
Thank you. Thank you. Thank you. She marks it as her bomb AF DPA product. If you follow Jocelyn, she's amazing. She is just awesome. But did you hear what she said? Right? We talked about leveraging this DPA. I will tell you, maybe 3 out of 10 buyers that call on a DPA ad actually need DPA. And I remember the specifics on it. Jocelyn, I followed up with her early the next week, and she said she already had 2 pre-approved buyers and 1 realtor that reached out wanting more information on this. But the key thing that she said was the buyers she ended up pre-approving, she did not pre-approve for a DPA product. So for all of you, for the 8 of you that love DPA, thank you. For the other 76 of you that are on the call that don't love DPA, advertise DPA and you're still going to end up with well-qualified buyers. And at the end of the day, the goal is to connect you with a buyer. It's like we said, the perception is free money. And if they think they're getting free money and you're advertising free money and they're in the market for a home, they're going to call. So looking at this real quick, this is now adjusting the pricing for income meets, which means they're at 100 to 120% of the county AMI. And that 7.75 that was paying about 70 basis points now jumped up to 1.5. You can see that by checking that little box and being more diligent, you saved your client 7/8% in fee on a 500,000. Yes.
Quick question on that though. That is, if they're like firefighters and stuff like that, we can do that no matter what. Is that correct?
No. So regardless of what their employment is, this is a Fannie Freddie product or enhancement that simply says, if you're at 100% in a non-high balance county, we waive it. If you're at 120% or less in a high balance county, we waive it. So it's not tied to any particular employment or anything specifically there. Just straight, here's the AMI, here's your income. But tying into Andrew's question earlier, I do have the ability to say, for example, your client earns a lot of, you've got a firefighter that earns a lot of overtime. We don't need the overtime to qualify. I can omit that income and only use base pay, put them at 100% of the AMI, and waive their LLPAs. But guys, you're welcome. Jump on this marketing. I've got fantastic collateral. If you're not doing open houses, you want to partner with realtors, identify properties that would be a great fit for FHA. FHA is always an awesome starting point. Jacqueline, so grant amount is not added to the loan balance. That is correct. Free money, free, like really free. And you get them out of it after 6 payments. But I was doing a training at a big Century 21 office, and this is another true story. Had a guy, anybody have any properties been sitting on the market for 45 plus days? One guy raises his hand. I said, all right, what's your current price? 625. I said, all right, well, in 45 days on market, is your seller starting to get a little antsy? He said, seller's ready to panic and jump ship. I said, okay, you got to do something on this pretty quickly. What's the game plan? He said, we're actually going to drop the price. This was on a Tuesday. We're going to drop the price going into the weekend. I said, I'll tell you what are you going to drop the price to? He said, $599. So instantly, okay, we all collectively on my side of this call think that it takes 4 to 5% to be able to close escrow on a transaction. That's going to cover loan officer compensation. That's going to cover title, escrow, prepaids, all of our random fees. So 5% on the high end is always ingrained in my mind as what we need to try to target when we're going to structure a DPA transaction. They said, I'm going from 625 down to 599. Instantly, I'm thinking you're putting 5% on the table. I said, I'll tell you what. And there was a loan officer that brought me in. I said, I challenge you two to do an open house at this home this weekend and not drop the price, but instead offer a 5% seller credit to offset closing costs. And I said, you guys go put a video together and market this like you've never marketed anything in your life and see what happens. I said, put a video together that just looks like this. And guys, like if you're going to walk away with anything, put a video together that says, hey guys, I have this amazing opportunity. We have an open house at 123 Main Street. There's an exceptional down payment assistance program that is going to give you free money for the down payment. And I've got a motivated seller that's going to pay all of your closing costs. We could literally get you into this home for no money. And that was it. And I helped them put the video together, and they used some of our marketing collateral, and they advertised this open house. And when I followed up with my customer the following week, he said that they put that house under contract at that open house, not necessarily at it, but a buyer that came into the open house. And we really started to peel the layers back. And he said, promoting it like that created an incredible amount of excitement and energy on a house that had been sitting for 45 plus days. And the most interesting piece of that was they ended up selling it to a buyer that did not need down payment assistance, even though all of the buzz was surrounding the down payment assistance program. So when I tell you this DPA, whether you want to use it or not, is the best product that you could market to your clients, it genuinely is. Todd, would you jump us off the screen share for the moment?
Yes.
So guys, in a nutshell, that is the product. That is the power of that product. And that's a quick blurb on how you can partner with your realtors. I mean, I've got clients that literally, will call around their realtors and see if somebody's doing an open house, and they'll go ahead and put open house flyers together for the realtor, co-branded. It would be like me saying, hey, James, you're doing an open house. I'm going to put a flyer together for you. I'm going to make a really cool flyer, but my picture is going to be on it as the lender, and I'm going to come over and drop it off for you to take to your open house. I mean, minimal cost. It'll take you 5 minutes in my system to make the flyer. And literally, this guy in particular has done that dozens of times. I've asked him, no, I mean, the same probably 8 to 10 realtors, but nobody's ever said, no, I don't want your flyer. They're excited to have free collateral, something free to hand out to the buyers walking in the door. We will help you grow your business. We have a lot of resources to help you do that. Please reach out to us. So let me just open it up real quick. Any questions anybody has on any of these products?
Jason, I'm back. Can you hear me?
Yes, you're back.
That scenario on the marketing for the open house, how did they get the best bang for the buck? Did they push that out with meta ads on Facebook? How did they get the most attention for that?
I don't think they did anything that cost them money. I think they just literally put it on their Instagram, their Facebook, their TikTok, and organically blew it up. I know that they were promoting it within the office, sending it to other agents. I think that this product, because keep in mind the premise, free money. When that's what you're selling, it sells itself. Now, if you wanted to do targeted Facebook ads and really get specific on that, of course, I think it would blow it up even further. But I don't even think you need to.
Gotcha. Okay. And you said you guys have marketing tools in the portal when I log in for
Yes,
like
sir.
rate flyers for like I can create like open house flyers with rates and whatever FHA, VA comparisons.
200 plus flyers available in English and Spanish on our website at your fingertips.
With term flyers, rate flyers, right? I can
Hey, honey.
customize them, whatever.
Yeah, you can
Okay, hold on a
customize them.
second.
You could highlight programs on those flyers. You could do whatever you need to do, whatever you want to do.
All right. I will get with you to check that out some more. Thank you, sir.
Okay. Absolutely. Absolutely. All right. Any other questions, team?
Hi, I do. My question is how or who should I contact if I have scenario questions?
You could call or contact any one of us. So, Todd or Dylan, can you put all of our contact information in the chat? You can call me. I do a lot of trainings. If I don't pick up, call Todd, then call Dylan. Then like we appreciate stalkers. Just keep calling us. Send us an email, send us a text. Someone will call you back right away.
Okay, thank you.
But we work together. So it's not like, I mean, if you have a huge, enormous problem on a file, call me. But like scenarios, structuring, anything like that, yeah, just reach out. We'll get in touch with you right away. Julio, you have a question, sir.
Yeah, I just wanted to confirm, a couple other lenders that do DPA change their EPO policies if you do DPAs. Is that the case with y'all, or does it remain the same as a normal loan?
Standard normal loan. Are you referring to EPM by chance?
Perhaps.
All right, they absolutely got destroyed on their EPO. And we used that as a footprint, and specifically they offered a similar grant, but it was higher credit score, more restricted DTI. So we put a clause in our grant. It is free money. It is forgiven at the close of escrow. But if they request a pay, and this is part of the reason we service it, if they request a payoff demand and there's an addendum to the note, we will include the cost of the grant. So we basically, and the problem is, if that loan gets paid off, now I'm coming and knocking on your door to pay back all of your commission. And we do not want to create a scenario where we're going to have early payoffs because it is not good for the relationship. So in the event we get a request for a payoff on that, I mean, any other program, it's challenging to pay that off within 6 months. So specifically to the answer to your question, we do not modify our EPO specific to DPA, but we do put a clause in there that protects you so that loan really, if they realize they have to pay the grant back within 6 months, they're not going to pay it back. So
understood.
You're covered.
Perfect. Thank you.
All right, guys. Any other questions we can answer for you?
Antonio
Jason.
did put in the. Oh, go for it, Tim.
Jason, I've got a scenario right now that I need to talk to you about that I've got a call in about an hour to talk to the clients. So
Okay.
Can you go offline with me? Give me a couple minutes just so I can pick your brain.
I absolutely can. So Tim, you were the first one to ask. So the moment we get off this call, I'm going to dial your number. As long, there might be some ladies here checking you out that are like, all right, I'm going to get his digits right now. But Tim, if you could give me your number, I will call you as soon as we get off the call.
303-929-2853.
Okay, 929. That was 2853, correct?
That's correct. Yes, sir.
All right. You're in Colorado.
Yes, sir.
Go Broncos.
Yep. Late night last night for the Avs too, let me tell you. So
I heard that they're playing the Kings, which would theoretically be my team, but I'm not a hockey fan, so don't hate me if you are. But I heard there was some broken glass behind the Kings bench, but I am a Broncos fan. So Tim, I'll connect with you as soon as we jump off the call, which should be in the next couple minutes.
Thank you.
You got it. Any other questions, guys, before we wrap up? You've got the whole team here. We're happy to help. If you need credentials, reach out to us. If you have questions on files, give us a call. We will all be available all afternoon. And Dylan took a list of everyone that went on camera. So call me when you have your file uploaded, and we're going to hook you up on pricing. Unless it's a jumbo. Those you don't get. We like the company that I feel like we do those for free, but it's good for volume. But all of our agency stuff will take care of you guys. So any other questions that we can help you with? Going once, going twice. All right, guys, it has been a true pleasure having you all here. Thank you for the participation, the great questions. We hope to do business with you and help you grow your production. So don't hesitate to reach out. Tim, give me 30 seconds and I will be calling you. All right, guys, take care.
Thank you very much.